Welcome to StockMarketFunding.com. It's a Saturday. The date is 5/8/2010. What do I have before me? I have the S&P 500. And once again, we had our capitulation last week. We've made a lot of money off the capitulation and had a profit huge off of a capitulation. And how do you buy the bottoms? And what is the mechanics of the capitulation? Well, it was just a week ago Saturday that I said we would come down over a period of time. They decide to do it in 10 minutes, where normally you could have $1,000 retracement on the Dow and other indexes. 93.68 overbought. You're only 72.28. Huge money to be made off of the capitulation. That's what we do here at Stock Market Funding. Huge money. Biggest drop in Dow history. How do you make money? Here it is, right here. You're only 72%. You were 93.85. You're not nearly overbought. This is where new people decide to start making a market at a lower price. There are price levels below, and people are going to be selling into rallies. So when you go up, make sure that you're a seller into the rallies. SMF had 4 stages to the market top. SMF had 4 stages to market bottoms. And basically, those bottoms is where you buy, and then when they rally up, people are selling into that to raise cash in the marketplace. That's what's going to happen for a couple of weeks. You're going to come in, you're going to backfill, you're going to go up, people are going to sell into it, you're going to backfill, then you're going to go up, and it's going to be in a trading range. On the Dow, biggest 1,000 point drop. How to make many thousands of dollars trading options, and the excitement of being able to get those prices at those levels that you couldn't have got a week ago up here. But down here, after the great Dow capitulation, there are good equities to be bought. So when we hit the bottom, make sure that if you do interact at a buy or sell, that on the way up, that you're selling into that upper end of that move at resistance, because that's where people are going to start raising cash, the bigger people in the market. Here's the actual haircut, and that 10-week moving average rolls over. That means that we have 1 week closing below the 10-week. If we have 4 weeks closing below the 10-week moving average, and if the 10-week, that blue line starts to roll over, then there's a lower range below the market. This is the first area of support of where that whole move right to here in this area is, we tested it and we're right back where we started. Gave it all up. Why? Because you were 93% overbought. Now you're only 72% overbought. Great trading ranges off the bottom. Take advantage of last week's capitulation. NASDAQ 100, same thing. But I'm closing below the 10-week. I'm not nearly as overbought. You want to see overbought? Go up here to where I call the top. 94%? Yeah, right. Like I'm staying up there. Now it's only 73%. People will come in and try to make a market. Okay? And the thing about it is, making a market down here is where you want to be a buyer and a seller. When they do make a market, just remember that right here is where the trend started. And this is the correction mode off of the capitulation. And basically, it's given up basically all of its move right in here in that gap. That started on 2.7. And now we're right back where we started from on a weekly. But SMF has a formula in weekly moving averages that meet the SMF bull and bear trend qualifiers. We have lots of that on our site. If that 10 minutes starts to roll over, we got a lower market. Here's the next area. And that's on the NASDAQ comp. NASDAQ 100, same way. Everything's closing below half of this weekly bar. And until I get a closing bar above it, but if that blue line, which was good for this uptrend, and we're right back here where the trend started during that capitulation week last week. Great moves off the bottom. Boy, did we have a good time Friday. We bought off of that bottom. We bought those contracts at the low end. We bought them and we sold them. And we just kept getting in where the market was being created, where people had conviction at buying down here. And then they bounced. But just remember that as long as I stay below half of my SMF weekly bar, and if that blue line, the 10 week, starts to roll over, any bounces are sold short. And not only that, you would take profit when you purchase off the bottom. And I hope that you follow those instructions. And this is called the NASDAQ 100. And we're going to have trading ranges and rallies off the bottom as we got 4 stages to a market bottom. Want to learn more about it? Visit us at stockmarketfunding.com or go look at our videos back at the end of February where we called the bottom 4 stages to a volatility, 4 stages to a market bottom, SMF 4 stages to market bottom. We were teaching our new people the 4 stages of a top up here. Now we're going to start working with just the opposite. The 4 stages is all, and you're going to have a lot of volatility. Go up, sell into rallies, come back. Go up and sell into rallies and come back. Go up and sell into rallies and come back. That's the way it's going to be. And it's going to be a trading range like that. And until I close above that bar, then that means any up move to that resistance, and we can't close above half of that weekly bar, and the 10-week rolls over, forget about it. That means that the trim will get worse. We were too overbought here. We've got a crossover here. All the kinds of things that we look at. 200-week moving average happens to be at 1733. That's roughly a little more than 100 points below the last price, down another 44. In the short term, on daily charts, where the trading ranges will come in outside of the weekly, is our longer term analysis, the SMF bear and bull count analysis. How to buy the market and sell into the market, and then sell short to market, and then buy back the market. And that's what we do. And that's the update on the indexes. There's a lot more that I could give you, but I don't have time. The time that I do have to say is that make money off of volatility and take advantage of that capitulation last week. We were totally in control of that capitulation. We just wanted you to know what other people around the world were feeling and experiencing that actually know the market. Remember, it's easy to make an opinion on something that you haven't actually went through. Anybody can do that. But if you really want a good opinion and you really want to see how fun that this business is and what we do, then come and join us for 5 days. Talk with people who are doing it. Watch these live entries and exits. Watch the live analysis before the market. Then make your opinion. I'm sure it'll be quite different than what you think today. That is and I'll leave it at the Dow Jones. I'm way below that 10-week. The farther that I go below the 10-week, and here's your big bounce in that capitulation of that 1,000 points, but here's the bottom line of it. That's the capitulation factor to there. Now, it'll all come down to one thing, half of the SMF Pro Trader bar. And if I can't get back above half of the bar and consolidate, then I'm not breaking there. I also broke the 200 week. The 10 weeks about to flatten over. I told everyone when Goldman led the market down what the bear trends, what Google did, they went into bear trends, and that the broader market would follow and it would catch up to it. And it has.